percentage-wise, how much is bank and how much is non-bank, would you say?
Probably maybe like 1%. Bank.
Really? That low?
Yeah.
That's
It's
a lot
very,
worse than I
very small.
thought.
Single-digit number a year, I'd say, bank.
Hello, everyone. Welcome back to the Valhalla Vault. We're joined today by Matt Gubba, founder and CEO of BizBritain, winner of various high-profile awards, including Social Entrepreneur of the Year, Most Influential Entrepreneur of the Year, and many others. We'll be discussing SME finance, how it's looking in the UK, how Matt sees it on the in the engine room at BizBritain, how he views banks, the current issues in the UK system, how it can be improved, and how SMEs can be helped more. Thanks for joining us today, Matt.
My pleasure, Ollie.
So you are the founder of BizBritain, which you founded in 2012, if I'm not mistaken, and it has grown over the last 10 years to be a very successful SME financing broker, connecting small businesses with finance providers to support them in their initial growth phase. And perhaps it's worth you giving a background into your story, how you came to found BizBritain, what were you doing before BizBritain, and what motivated you?
Sure. Firstly, thanks for having me, Ollie. Great to be on the podcast. So yeah, my background. So from a young age, I was kind of very keen on starting a business. I had a dad who ran a business. I had an uncle who ran a business, and it was always something that I kind of wanted to do. And kind of, I had a little dabble in the kind of world of business when I was a teenager. I actually founded a snowboarding website, which I kind of ran as a hobby for a while. But it was something that wasn't ever going to make me a great deal of money. So when I kind of left school and went into the world of work, I kind of had a kind of an idea in my head of a few of the kind of skills I wanted to learn that would kind of help me grow a proper business. And so one of those skills was kind of sales and marketing. Another one was finance. So between kind of my late teens and early 20s, I kind of dabbled around a lot and tried a few different jobs and eventually settled on an accountancy job that I worked in for around about 3 or 4 years. So I kind of learned everything about kind of financing within businesses. And when I felt confident enough, I left and had a pop at starting my own organisation, essentially. Why business lending? Well, it wasn't something that I originally kind of went out with the intention of doing. It kind of came about as a result of various different coincidences. I actually started out running business events for people who wanted to start businesses, startups kind of in the London area, with a kind of specific angle on trying to work with people who hadn't been to university, who wanted to start a business. Because one of my motivations personally was that I didn't go to university and I wanted to kind of have a career, and I had aspirations, but I found certainly with the employment market, there were kind of a lot of glass ceilings, really, which kind of prevented you from a lot of places would close the door in your face if you didn't have a degree or a relevant degree or whatever. It doesn't matter how good you were.
It's also, even if you've got a degree, if you're not immediately out of university, you're also a bit stuck because they're looking immediately for graduates or something. So, yeah.
Exactly. Yeah. So that's exactly it, Ollie. So I kind of wanted to provide something that would help people in a similar boat to me. So in my mind, starting a business is kind of the great equalizer, isn't it? You can have someone who's got no qualifications, no experience, and they can build a business that kind of puts them on a par with whoever you can think of out there. I mean, think of all the big name entrepreneurs and business owners who, Richard Branson, whatever, doesn't have a degree. One of the most famous ones out there, billionaire. It doesn't really stop you in any way, shape, or form. So BizBritain, when it first started in 2012, was actually kind of an organisation that was designed to help young people who didn't have a degree start a business. Now, coincidentally, around about that time, the government were starting to push quite hard this idea of starting businesses. And they had a few initiatives that they launched around the time. There was something called Startup Britain, and there was something that later came along, kind of late 2012, early 2013, called the Startup Loan Scheme, which was originally effectively a scheme for 18 to 25-year-olds to borrow small amounts of money from the government, effectively, to start a business. And that actually coincidentally tied in very well with what I was doing, and through the networking events I was running, I had actually made some connections with people within that kind of sphere. And long story short, we ended up being one of the first delivery partners delivering that scheme to young people in the UK. And that was kind of our first step into the kind of ocean of commercial lending, really. And over the last kind of 12 years, we've kind of become a full service commercial finance broker, and we deal with lenders of all different types, ranging from big banks to alternative finance lenders to government schemes, all sorts now. So got a lot of war stories.
Funnily enough, before we started this recording, Matt and I were just discussing snowboarding. I completely forgot that you used to run a snowboarding website and forum. Not that we will go into a huge amount of detail on that now, but that's amusing that you were doing that before. So when you set out BizBritain, you said you were helping people start, and specifically people who didn't have degrees, start companies. So was it not a broker at that point? You weren't connecting them with finance opportunities, or were you providing other support, or was it connecting them with startup finance?
Yeah, so when we first started out, it wasn't a broker. It was an online resource, so we had a website, and one of the kind of main activities I was doing was going around and interviewing famous entrepreneurs who didn't have degrees. So I had a kind of long list of people, and effectively creating content and resources that would help other young people kind of do the same thing. So that was kind of one of the things we were doing. We also had partnerships with a number of different organisations who could provide products or services for small businesses where we would obtain discount codes and that kind of thing. So it was kind of just effectively a website to help people start businesses without a degree. And then after about 6 months of doing that, as I say, we got involved with the startup loans company. We bid for a contract. We got a contract, and that was how we became a finance broker. And that kind of opened up the door for lots of other stuff. We became FCA regulated and started working with other lenders. It just kind of snowballed from there, really.
Brilliant. Such a fantastic idea as well, to support people. And your success has, recently especially, I've been watching BizBritain and the marketing that happens and going out with notices saying we've just crossed 100 million finance given out and all this sort of stuff. It seems like the last few years especially, you guys have grown exponentially and helped. How many businesses in total do you think that you've helped now through BizBritain, SMEs?
It's very much been kind of a hockey stick over the last kind of 2 or 3 years. Overall, in excess of 7,000 businesses. But we're talking about high volume of low value amounts. So it's not like where people are going out looking for investment and trying to raise £500,000 or £1 million. We're talking about someone who's left their job and wants to start up a consultancy. They need 10 grand to buy themselves some equipment and a laptop and some marketing and stuff like that. So the loans range, startup loans specifically we're talking about here, range from kind of 500 to 25,000 with an average amount of 12,000. The other brokerage we do outside of that, we're talking generally kind of mid 6 figures.
So is that the SME side of things? Because you're an SME broker as well as the startup.
Exactly. So we service through from pre-start through to around about the kind of, I'd say no larger than low seven figure turnover businesses, because we're kind of dealing with people that want to borrow in the kind of SME brokerage side. We're dealing with people who want to borrow 100k to kind of 500k. So
that's great. That's the small business side of the SME segment, and they certainly need the help, as we know that SMEs are the backbone of almost every economy. I think in the UK, over 98% of businesses are SMEs, or over 99%, I think, are SMEs. They employ
vast majority.
Yeah, 2/3 of the population is employed by small businesses. SMEs impact everyone's part of life, whether you work for a big company. Big company suppliers will most probably be SMEs in some way.
And customers a lot of the time as well.
Customers, and also when you high street, do you want a high street full of houses, or do you want a high street actually thriving with some small businesses instead of everyone buying from Amazon and the likes? So
exactly. What a lot of people don't realise as well is that small businesses actually they create the majority of employment in the economy as well. And the majority of jobs are actually driven by small businesses. So like you say, they are absolutely essential.
So what I'm keen to go into today, because of your experience and perspective on SME finance in particular, being on the forefront of it, being in the in the engine room, if you like, and the coalface. Is how have you seen it over the last 10 years in terms of support for small businesses, financially in particular? How are the banks responding to the needs of SMEs? And what solutions are out there? I'm keen to hear your thoughts.
Yeah. So, I mean, if we rewind back to when we first started out in 2012, there was very little back then. It was the big four banks really. There weren't really any alternative lenders that were accessible to people. And has it changed? Yes, it really has. There are a lot more options now, but there is still a huge funding gap. So if you kind of look at the market now compared to then, there are a lot of alternative finance providers, things like peer-to-peer lenders, various different kind of specific lenders who work in different ways. So you have like short-term lenders who do high-interest short-term loans. You have the peer-to-peer lenders who tend to do larger amounts over long periods. I won't mention the brand names. I don't want you to have to edit them out. But the problem is that you find, though, as the markets become more established, and certainly a lot of the large brand peer-to-peer lenders and alternative finance providers now, as they get bigger and they get more and more external investment, and they get the kind of private equity guys coming in, their focus becomes more and more and more on maximising their profit, and inevitably that means that they want to take less and less and less risk. Their lending becomes a lot more algorithmic driven, and in all honesty, it becomes not much easier than getting a loan from a big bank. There are still lots of smaller lenders out there, but there's still a big segment of people that are underserved. I mean, is it better than it was 10 years ago? Yeah, it's better, but we've got a long way to go yet.
In sort of 2015, 2016, the rise of neobanks came up. It's very quickly, it became a household name, neobanks, out of nowhere, really. Neobanks, in short, are effectively challenger banks that are there to disrupt the current financial system, offer digital alternatives, mostly digital solutions to customers and businesses, and have a very niche space in the market. People view them, I think, as sort of saviors, if you like. They're coming in to help the system increase competition, offer loans, offer better banking services. I use Starling for my small business for a current account, and it's brilliant. For KYC and everything, it took less than a day for the whole KYC process to complete, versus the big banks, which can take weeks. So I certainly understand the niche benefit. But in terms of actual SME support, other than current accounts, what's been your experience of challenger banks like Starling, Monzo, Revolut, which isn't a bank, but what's your experience been of them?
So in all honesty, I think you've kind of nailed the main benefits there. So you've got what they call themselves challenger banks, and effectively they're basically banking apps, aren't they? They've cut out all the branches and they've kind of doubled down on having everything online. Now, I think, it's great that you can, if you start a new business or you want a new business account, you can literally download an app and you can have it all set up, all your KYC done and passed within a couple of hours, and have an account ready for you the next day. Versus, back when we first started, it would take you, like, as you say, weeks. You'd have to apply on paper. You have to take it into the branch, whether it's photocopy your ID, and maybe 3 weeks later, if you got approved, you'd have a bank account, which was a massive pain. And I think they've addressed that very well. However, in terms of other support, I don't think they have much to offer beyond, at the moment, certainly beyond current accounts and the expedited process for starting them up. But certainly no notable products that I'm aware of that they're kind of bringing to the market that's changing the market.
We're talking about the SME current accounts and helping them like that. If I said to you Monzo's latest annual report, so Monzo, the challenger bank in the UK, their latest annual report, how many times do you think they mentioned SMEs in their annual report? Considering SMEs are 99% of the UK business population, how many times do you think the annual report mentioned SMEs? Have a guess.
I'm gonna take a guess and say it's very few, maybe like 0 or 1.
Absolutely no mention of SMEs in that annual report. It's insane. It's absolutely insane.
It is, and I think it's beyond just the fact that I'm aware of. None of them really offer any financing facilities for SMEs. They don't offer much in terms of other support as well. I mean, people get on the back of the big banks because they don't lend to small businesses in the way they should, which they don't. But they do, in fairness to them, like some of the big names like Barclays have some quite good support schemes out there for people. Resources and information and things you can kind of study online. I don't think the neobanks, in all honesty, there's a lot of hot air there. I think they're bringing a great kind of progression in the sense that of the KYC and the automation of all that, and the fact you can have it on your phone and all that kind of thing. But really, is that something that makes such a critical difference to businesses? Because like with personal accounts, once you have a business bank account, it's very rare that you're going to change it. I mean, we've had the same business account for the last 12 years. And it's kind of a small problem, but it's not anywhere near on the scale of the problem of not being able to access financing when you need it, and that's kind of what the market needs to address really. And I don't think that they're doing very little from what I've seen to address that.
Well, Starling gives some context there. In 2021, they did 2.2 million of SME lending, which sounds fantastic. 2.1 million of that was the government-backed loan scheme, which was pushed on the banks, and the banks had no risk whatsoever because it was the government credit.
It's about credit rating, wasn't it? 100% credit. Yeah.
There's 0% risk.
Yeah.
In terms of risk-weighted assets, so for banks, they have something called RWAs, which are risk-weighted assets. Now, these risk-weighted assets make up and decide what allocation of capital they need and all this in order for them to meet their regulatory ratios called Basel ratios. So banks care a lot about risk-weighted assets. And in fact, when I was at HSBC a few years ago, and don't worry, I wasn't depressed just because I'm saying that. That HSBC as an employer was brilliant, but wasn't doing everything it could to help small businesses as the big banks aren't. But when I was at HSBC, there was a big drive in my last year there to handle the risk-weighted assets and fix their RWA positions because they realised their capital wasn't sufficient to match their RWAs. So banks care a lot about it. So the governments were saying 0% risk. We need you to lend to SMEs. So of course the banks, Starling and stuff, easy. Just apply online. Digital solution. There you are. Apply online. Fantastic offering for SMEs for that single purpose. But 5% of the total amount was actual SME lending. So nothing. Now we look at
very little.
23. Since 2021 to 2023, would you estimate the lending has gone up or down?
With neobanks, I would estimate it's gone down dramatically because, as you say, it's it was a government scheme. It was
exactly. So again, 95% of the outstanding loans are government-backed loans, and I think it's gone down to about 1.4 million now. So what that's actually showing is, even though yes, there was a push in 2021 thanks to government support, since then there hasn't been a push by the bank to do SME lending. It's just unwinding the existing loans that are outstanding.
Yeah. So, I mean, and to put into context as well, for an organisation, a national banking organisation like Starling, saying, look at us, we did 2.1 million of small business lending in a year. We do that in a month. And we're not a bank, so
that's true. And 0.1 million of actual risk SME lending is nothing, and it does need to improve. So first off, Captain Gubba, as your name on Riverside says, how important is finance for small businesses? So we talk about current accounts. Okay, they get a personal account with Starling, they get a current account with Monzo. Fantastic. Do they need bank lending? How important is it for a small business?
Obviously, the question: do they need bank lending? It all comes down to what their initial investment was personally. Are they starting from zero and they're just completely financing themselves with sales and the proceeds of the work they're doing? Have they stuck money in themselves? Have they had an investor? Assuming that someone like most people starting a business are kind of bootstrapping, maybe putting a little bit of their own money in, a few £100 or something like that. It's absolutely essential, because it's not just about the kind of speed at which you can grow. It's as I say, cash flow is king, or cash is king. You need, when you have a business, in most cases, some kind of working capital to be able to get you through your kind of monthly cash flow cycle. So, if, for example, most businesses will operate some form of credit terms. It's pretty common for people to do to invoice and be paid on 30 days, and a lot of the time with smaller businesses, you're paying for a lot of stuff up front. So you can make 10 grand's worth of sales in a month or whatever, but you don't see that cash straight away. All in the meanwhile, you've got bills coming out, you've got stuff, you've got staff you have to pay for, you have to pay all your other kind of operating costs. So that's where financing comes in, really. It kind of, certainly early on, it can very much act as your kind of working capital buffer. So say you have have a loan for your kind of 30 or 60 days of your kind of operating costs. It gives you that cushion that you're bridging your payment terms. In terms of growth and being able to kind of get yourself off the ground, really. Things like, with starting a business, inevitably there's going to be a lot of upfront cost in most cases, unless you're just a man in a van around doing odd jobs. If you want to start a proper business where you need to have like a website and marketing collateral and hire someone to kind of help you out, all that kind of stuff, there's going to be some upfront costs. And unless you've got that money squirreled away, or you've got like rich family who can give it to you, you're gonna need some kind of financing, really, to get going in any kind of reasonable pace. So yeah, I mean, it's essential.
And we've been talking about the small businesses you mentioned earlier, and we mentioned the suppliers and customers of these big businesses. And big businesses, especially the likes of like Tesco, for example, if you're a small business supplying to the likes of Tesco, you're not going to see that money for a long time, potentially 5-6 months before you'll see them actually pay for your invoice.
So a lot of them are on 120 days, 120 days payment terms.
It's insane. So how are you supposed to finance that gap? So the big banks can offer solutions like receivables financing, where they effectively finance all the invoices that come in.
Which is very expensive.
It's expensive. The small businesses, it's very low risk for the bank, and for whatever company's doing it. But for the business, it's very expensive to have that. But have you'll be familiar with Hidden Champions in Germany, which is small businesses in Germany, which has a banking system dedicated to helping them. The Sparkassen, community banks, small banks are there local banks are there to help the local SMEs. And what they found is that small businesses in Germany excel, and they become leaders in their niche sectors, because all the financing they need to develop, do technological development, buy in new machinery, improve their processes, the banks are there to support them in making that change. So instead of having to save up for months and months and months, they can immediately get that change from a financial support, make the change, improve, and then suddenly become way ahead of the competition.
Yeah. It's a great model, and it's kind of been proven time and time again, as you say, that kind of new businesses and small businesses are the kind of driving force behind growth in the economy. And anything like that can stimulate a kind of new businesses, or smaller businesses growing faster and becoming more established, creating more jobs. It's always going to be a net benefit for the economy, and a positive for the citizens and the people of the nations as well. I mean, we don't have anything quite like that in the UK that's established, but I mean, the startup loan scheme that we're involved with does have a similar kind of ethos, in that it kind of helps subsidise people starting out. But I think the community banking model is.
But the startup loan scheme, that's a small amount of money, as you've mentioned.
It's a small amount of money.
Technological, development.
It needs to be rolled out on an industrial scale, as you're saying. With community banking, it can be done at scale, it can be large, and it can be a giant.
So your experience so far of the, perhaps it's worth us just going into a little bit of detail about the differences between a bank, a non-bank financial lender, and the likes of neobanks. We've talked about neobanks, what they are, their digital solutions. They're not. They are banks. Revolut's an interesting case, because Revolut is a bank in Lithuania where they have a banking license, and therefore in the EEA, but in the UK they're not a bank. They're a non-bank lender. Has Revolut? Have you had any interactions with Revolut with your work with BizBritain? Are they at all on your books?
We don't directly work with them. I know people who've had accounts with Revolut, but no, we don't. We don't specifically work with them. I think, like with all of the non-banking finance providers and the neobanks, I would always, obviously, not wanting to kind of rain on anyone's parade, but you hear these horror stories, don't you, with when people put their money or they use any of the neobanks for their kind of their primary current account, their business. And not that it doesn't happen with the big banks. They're very prone to freezing people's accounts, whether it could be any kind of automated fraud flag or whatever. Now, when that happens with a big bank, there's a lot more process in my experience for people to get something done about it, say what's happened here, how do we unlock it. Whereas I've heard horror stories with people who have relatively large amounts of money, for an individual, 5-figure amounts sat in a neobank account, and the account gets frozen.
Wow,
again.
That's fair.
Yeah,
it is fair.
Yeah,
and
it is. Yeah.
It's interesting you brought that up, because I was speaking to a friend of mine who has a business in the UK as well, and he's in the same boat where his account's been frozen. I think it's because he's not really done much business. It's like just dormant company, but they've frozen it, and they're being very difficult when it comes to when he's trying to unlock it, and he's been trying for months and months and months. And he's okay. He doesn't rely on that money, but it's disgusting, especially in the current climate where people are living, a lot of them, paycheck by paycheck, and if they can't access that money, it could severely damage their life.
Absolutely, and I think a cynic might think, not that I'm alleging this or saying this is what they're doing, but a cynic might think that they are abusing anti-money laundering and fraud regulations to kind of pad their profits by taking people's money.
Well, we did a blog recently on that, actually, on the website, following on from people raising concerns around the anti-money laundering rules and hiding behind policy in order to not even have to explain to the customer why accounts have been frozen or closed. How many people are actually money laundering? Out of the people they're freezing, it's very few.
Small percentage, I imagine.
Exactly. So they're just painting everyone with the same policies and hiding behind it to do, not 100% honest practices, we could say.
Yeah, it seems that way. I've done it for years.
Have they?
I've got a long list of stories of people who've had their money seized with no recourse.
That's awful. And what happens with this money?
Goes onto their balance sheet.
Because the thing is, it's not a bank, so I'm not sure how their relationship works in terms of the terms and conditions and everything. But a bank, it's the bank's money. That's clear. When you deposit money at a bank account, you're not actually depositing money; you're lending the money to the bank. So it's the bank's money.
Yeah.
Now, you've got deposit insurance schemes, which means you are protected if the bank goes down and can't give you your money. You're protected, but up to a certain amount. But people don't realize it is actually the bank's money when you're loaning them that money. The likes of non-banks, when you deposit your money at a non-bank, like a stockbroker, it's actually your money. It's not the stockbrokers, and they have to hold it in a segregated client money account that is separate from the company's account.
Yeah.
So your money is actually safer if you keep it at like a broker or something, because they can't touch your money. The bank can't touch either. It's in a segregated account at the bank, but it's in a segregated account. So no one's got their hands on that money other than you. So it's actually safer. But the difference is, surely the non-banks must be, when you work with them and speak to them, are their rates substantially higher than what the banks are offering? Or are the banks also offering sort of unfair rates?
What, in terms of commercial lending, sorry?
Yeah, for the small businesses. Like, what's their relationship? What are they asking for in terms of, are they asking unfair terms? Are they asking high rates? What's the sort of...
It really does vary. So, I mean, it's quite a big market now in the sense of the type of products available. But broadly speaking, you have unsecured loans, which are generally done based on trading history, profit on previous accounts, credit score, and your kind of your bank statements, analysis of your bank statements to see if you've got the cash flow to support the repayments. Then you've got secured lending, which is going to be based on some form of asset. It could be assets owned by the business owners, so like a home. It could be assets owned by the business. Generally speaking, unsecured lending is obviously going to be a lot more expensive. Very much varies based on your credit profile and the size of the loan versus your turnover and profit, and the risk profile. So at the very low end of the market, I mean, interest rates have gone up now, but I mean, you're probably talking, excluding government subsidised schemes, you're probably talking that 10 to 12% a year is kind of the lowest you're going to get for unsecured, going anywhere up to, a lot more than that, can't be 4% a month. So
is this talking banks or non-banks?
This is talking non-banks. Sorry, banks generally speaking, the interest rates are lower, but that's because they're only dealing with very low risk profile businesses. So they're not going to lend to you if you're not doing a significant turnover. And
see, that's an interesting one, because we're saying risk.
Yeah.
Now, banks have hidden behind SME risk for a long time, saying SMEs are higher risk. This is why we don't have them on our balance sheet or all this. But from what I've seen, that's not entirely true. And in fact, the default rate with SMEs, especially, again, if you have a very close relationship, if the bank is doing their job properly and have a very close relationship with their customer, the actual default rate is very low, because there's a moral obligation to repay, but also the bank's not, they know what the business is doing, they know what they're using it for, and the SME isn't squandering it. So it's funny talking about risk, or is it that the big banks just don't want SMEs on their portfolio?
It's a difficult question. I mean, their argument is always risk, isn't it? As you say, whether or not it's more risky or not is a tough question. I guess when you're talking about larger businesses, they have the assets and they have the kind of collateral, as it were, whereas it can be seen, that there's more recourse. But it's certainly, it's something they hide behind a lot, I think. I think it's largely to do with profit. Why would you get out of bed in the morning and do a 50 grand loan for a small business that's going to make you maybe 10 grand in interest, when you can do a 50 million pound facility for a big company that's going to make you 5 million in interest doing the same amount of work? I think that's what it comes down to largely.
Yeah, I think you're right. There's a reputation thing as well. If you're a banker, you want to be dealing with the bigger amounts. It's more fun, it's more interesting, all that sort of thing. Which is why you need local banks that are set up to help small businesses and not help anyone else, not help big businesses, focus on SMEs. So that way there is no, we don't want to deal with these businesses, we want to deal with this more attractive one. There is none of that.
Exactly.
But in over the last sort of 12 years, 12 years since you launched, have you found that non-banks are the majority of your finance providers in terms of they're the ones stepping up and actually offering the loans to the small businesses?
Absolutely, yeah, that hands down. It's very rare that we do anything with the big banks. It's we do a small handful here and there. But
what percentage-wise are the loans that you guys are helping SMEs find? Percentage-wise, how much is bank and how much is non-bank? Would you say?
Probably maybe like 1%.
Really, that low?
Yeah.
That's a lot worse than I thought.
Single-digit number a year, I'd say, banks.
Crikey, that's appalling.
Of loans.
And considering what you guys are doing is you're working with every SME that approaches you, you're trying to find them the best solution that works for them. So you guys are right in the middle of this. You know the scene, and it just shows you the credit gap that exists, and that the banking system, especially in the UK, is not fit for purpose when it comes to helping SMEs, which are 99% of the businesses.
That's it. No, you're spot on there, Ollie. It's it's not fit for purpose.
So what's the solution in your thoughts, Matt? Like what's needed in the UK?
Well, as you mentioned before, I think we need something like that. That's similar to the community banking model they have in Germany. I know that Valhalla are working on doing something just like that globally. I think we need more localized lending that's there to service the community and not there to kind of pad the profits of a large master organisation. Because ultimately that's what it comes down to. Localized, is it? You look back 50 years, 100 years, that was how everything was done, wasn't it? You go into your local bank branch, they'd know you, they'd know who you were, they'd know everyone in the community, and it'd all be done on that basis, very personal. And that's what works for small businesses, and that's what small businesses need. So I think we need to move towards a more localized, a decentralized but localized model of banking, certainly for the small commercial lending for small businesses.
Great, excellent. Thanks, Matt. I know your time's running short, so we'll wrap up here. But we'd love to invite you back in the future and discuss it in a bit more detail. Go more into your background as well, as I know I know that you have an interesting background in terms of the motivation and how you actually turned yourself into such a success, where you've now won about 8 or 9 different awards. You've got Entrepreneur of the Year, Startup of the Year, all this sort of awards that you've won over the years. You've got an interesting story there that I would love to delve more into at a future episode.
Absolutely. Happy to come back anytime, Ollie. It's been a pleasure.
Excellent. Thanks, Matt.